Hello and welcome to another edition of the Sunday segment, a place where I break down the three biggest financial news stories of the week. This week we're going to talk about Apple's market cap passing the $2 trillion mark, Robinhood app's valuation at $11.2 billion, and Airbnb getting ready to file for an IPO. So let's get going with the video. As always, make sure that you hit this like button and hit that subscribe button so you don't miss out on any further videos, especially the Sunday segment. This week, shares in Apple crossed the $468 mark. This meant that Apple became the first American company to be worth more than $2 trillion. This means it's worth more than Microsoft, Amazon, and Alphabet, and is particularly impressive because only 2 years ago did Apple pass the $1 trillion mark. At the moment, we're going through a global pandemic, and this has made this result even more impressive. This is especially impressive because the global economy is falling into recession. And back in March, Apple told investors that they were struggling to fulfill orders and close all their stores. However, overall sales for the company in the June quarter soared by over 11%, pushing the stock higher. The stocks have been pushed even higher as the company announced a 4-for-1 stock split. This stock split is similar to what I mentioned last week in last week's episode with Tesla splitting its shares. To put the rise of Apple into perspective, the stock-adjusted share price at IPO would have been 39 cents, and now the shares are worth nearly $500. This is significant because right now we're in the middle of a pandemic, and Apple's results and their performance in the stock market has been remarkable, making it somewhat immune to what's going on in the wide world. It has had strong iPad and iPhone sales over the last 3 months. This could be because more and more people are working from home, meaning that employees are now have to be contactable, so their employers have bought iPhones, and also kids aren't going to school and they're learning at home, so need an iPad to work on. Announced that it will split at the end of August has definitely helped. As we saw last week with the announcement of the Tesla stock split, Apple likewise has benefited from a stock split and the share price has rocketed. And one thing that we can't forget is as Apple is getting a bigger and bigger company, it's also becoming a bigger slice of the S&P 500. And it has been one of the main drivers of the S&P 500, gaining over 50% in the last 3-4 months. Is this performance going to continue? It's really hard to tell. Right now, unemployment around the world is being kept artificially low through furlough schemes. And also, you have to think that the recession that we're falling into hasn't really bit. Therefore, are people still willing to spend over $1,000 on a phone? We all have to really consider that. Overall, I think Apple's share price has got incredibly expensive. However, it probably is likely that it's going to go higher. Because of stock split, it will make the shares look cheaper. So after the 31st of August, the shares will be close to $100 rather than the current $400 that they're currently worth. This means that more people will buy into them and therefore edging the price higher. However, let's not forget we're in the middle of a pandemic and probably a global recession. Will people really want to spend $1,000 plus on a new phone? That really has to be questioned. So we'll wait and see. But we could be in a world where the Apple share price is unsustainable. Next up, we have Robinhood being valued at $11.2 billion. This week, Robinhood closed a funding round of $200 million from a New York-based hedge fund, valuing the company at $11.2 billion. Robinhood, the financial app which has enabled people to access the financial markets for free, has been growing massively and been a great beneficiary of the pandemic. In the first quarter of the year, it gained 3 million new users. And by June, it had 13 million users, making it bigger than publicly listed trading companies such as Charles Schwab or E-Trade. And over the last 6 years, Robinhood has raised $1.7 billion from investors, valuing the company now at its high of $11.2 billion, with its latest funding round of $200 million. So as an example, a funding round doesn't necessarily mean that the company is worth that much if it was sold today. What it means is that an investor has agreed to buy a slice of the company for a certain price. It's exactly the same if someone came up to you and offered you to buy 10% of their company for £1. Buying that 10% slice for £1 would value that company at £10. This is exactly what happened for Robinhood, where they agreed to sell 1.8% of the company for $200 million. This is a meteoric rise for the company, which was valued at only $60 million back in 2014 before it launched in 2015. Ever since, it's become an established part of the financial world, with people in America using it daily to benefit from the no charges when they invest in stocks. This is great news for the company and users of the app alike. However, one needs to remember that Robinhood hasn't been without its hiccups. Earlier in the year, it shut down when there was excess market volatility. Also, it's seen as a place where people are buying stocks and pushing up the price of assets such as Tesla and Apple, as we just discussed. It has also shelved its expansion plans to countries such as the UK and Australia, so who knows, they might be on the cards after this funding round. Robinhood is clearly an app which a lot of people, especially in America, use, and this is something which we'll all be watching intently. Valuing the company at $11.2 billion just shows how big this market has got and how important it is that people have access to the financial world. Will there be listing for an IPO? We don't know just yet. However, it is going along the right path to achieve that sometime soon. And finally this week, we have Airbnb filing with regulators for an IPO, making a reversal from what it said earlier in the year during the pandemic. Earlier in the year, because of the travel restrictions and the lockdowns in countries around the world, Airbnb mentioned that it was going to put its plans for an IPO on hold. However, more recently, it filed with regulators for an IPO, meaning that the process will be coming along probably quite shortly. At the moment, there is no indication of timing or size. However, we will watch intently to get a true understanding of when this could be. With this announcement, Airbnb will be joining a whole host of different companies who will be listing sometime soon. As the stock market is surging, it seems like a great time for companies to benefit from the higher stock prices. However, they have to work quickly because in November there's a US election, which means that increased volatility could really affect their valuation. At the moment, Airbnb is a private company, meaning that normal investors can't invest into it. However, an IPO means that it will be listed onto a stock exchange, meaning that investors all around the world will be able to buy shares in the company. As of the latest funding round, Airbnb is valued at $18 billion. This is a really interesting development as the company has struggled over the last 4 months due to the lockdown in countries and also people not being able to fly to destinations and go on holiday. However, the company has sought to cut costs and really build on the brand, which is going to be great for investors should it come to the market. Airbnb has struggled like all other companies in the travel sector. However, as we all know, it has redefined the sector by offering more and more rooms and really putting the pressure onto hotels. The company is really looking to make the most of its situation. Clearly, as the CEO, Brian Chesky, has mentioned that when the markets are ready, they are ready, which means they're ready to push the button as soon as possible. Is this likely that Airbnb is going to come to market? I think it is. So let's wait and see if the IPO will actually happen. Clearly, the CEO is motivated. However, financial markets, further lockdowns, and travel restrictions could really put a dampener on the actual IPO and the valuation of the company. If it is going to happen, it's likely that will happen in the next 3 months, as the coronavirus pandemic hopefully slows down, and just before the November US elections, which could put a dampener on any sort of investment into the US and listing of US companies. I don't think this is the last time that we're going to talk about the Airbnb IPO over the next few months, so watch this space and I'll keep you updated. As always, I hope that you've enjoyed this video and learned something new about the financial world. If there's any news articles that you've read this week that were really interesting, please let me know in the comment section below. And as always, before you go, make sure you hit that like button and smash that subscribe button so you don't miss out on any further videos. And I'll see you next time.